Hello everyone, good morning. Sage here from the Kalkine TV studios in Sydney, and you're watching the early trades. Let us cast an eye over how the Australian market charter is panning out today. Well, the ASX 200 edged lower during the early trading hours, dragged by the banking sector, and the Australian share market is declining for the second straight session. Washington H. Soul Pattinson was down 2.5% to $32.27. Northern Star Resources was trading 2.1% lower at $10.09, and Xero dipped 1.8% to reach $135.42. AGL Energy was trading 1.6% lower at $8.98. Origin Energy declined 1.6% to $4.63, and Seven Group was down 0.6% to $20.88. Afterpay shares were up 5.1% to reach $129.22, while Zipco was up 4.5% to reach $8.99. Redbubble was trading 4.3% to $3.38, and Pilbara Minerals added 3.7% to $1.55. Nearmap was up as well, 2.7% to $1.95. And meanwhile, the Australian benchmark index dropped 0.6% yesterday, led by a fall in the banking shares as concerns regarding a COVID-19 outbreak in the state of New South Wales deepened that call for the border closures and curbs on gatherings. Besides, the energy and gold stocks were the leading laggards. A new cluster of coronavirus has surfaced in the most populous city of Sydney, overshadowing improved global sentiments. And besides, it seems the market is still going through the after effects of the Fed's unexpected projection last week for the rate hikes as soon as 2023, which triggered selling in stocks, boosted demand for the US dollar, and led to the flattening of the US bond yield curve. Meanwhile, overnight, the benchmark US indices closed mixed after financials and energy scripts advanced, while other stock segments remained subdued. And the strong manufacturing data lifted the tech-weighted Nasdaq to a new high. The Nasdaq Composite rose 0.13% to reach 14,271.74, while the S&P 500 fell 0.11% down to 4,241.83. The Dow Jones shed 0.21%, closing at 33,874.25. Notably, flash US manufacturing PMI surged to a record high in June 2021, helping the Wall Street shares to cut losses short. However, the data revealed that manufacturers are still struggling to secure qualified workers and raw materials, significantly raising prices for both businesses and consumers. And moving on now in the bond markets, the yields on the benchmark 10-year US Treasury ticked up on Wednesday, one day after the Fed's Chairman Jerome Powell reaffirmed in congressional testimony that the central bank's view of rising inflation will likely be temporary. The 10-year US Treasury yield last traded at 1.4869% on Wednesday. Then in the currency markets, the US dollar index retreated from the upper levels after Jerome Powell's statement that rising inflation is likely to be temporary and assurance of being in no hurry to tighten the monetary policy. Let us now zoom our lens on the Australian share market charter for the day. We will be looking at the major newsmakers first. The top news of the day is from the BNPL juggernaut Afterpay, whose shares have soared on expanding reach into the US with virtual cards. Afterpay will allow some of its United States users to shop at a broader range of retailers, including Amazon, which is not signed up directly with Afterpay, in a strategic shift that will see it issue virtual cards through its app in the same way as major US competitors, Klarna and QuadPay. The move will allow Afterpay customers to use its instalment service at a wider range of online retailers. And Afterpay hopes it will encourage customers to do more online shopping through its shop directory, which serves as a referral engine to retailers. Next up is toll giant Transurban has announced it will pay a final distribution of 21.5 cents per stapled security, up from 16 cents a year ago. And meanwhile, Westpac Banking Corporation declined on board after backing down over the threat to exit New Zealand. Westpac said it would retain full ownership of the New Zealand operations to protect the shareholder value. And earlier in March, the company had threatened to exit the country due to the Reserve Bank of New Zealand's tough capital requirements. Looking at the next, CIMIC Group soared on updating its company's winning $4 billion contract. And notably, the Victorian government has selected CIMIC Group's Pacific Partnerships CPB contractors and Ventia together with other members of the Spark Consortium as their preferred proponent to deliver the North East Link Primary Package PPP in Melbourne. And Transurban inched lower despite announcing that it will pay the final distribution of 21.5 cents per stapled security. Let's now take a look at coal player Bathurst Resources, who inched up on announcing it would exceed the 2021 financial year guidance. It expects earnings before interest, taxes, depreciation and amortisation guidance of 55.4 million Australian dollars. Meanwhile, in January, the company revised the guidance down to 55.4 million Australian dollars. And moving on, Pilbara Minerals soared on reporting significant assay results at the Pilgangoora project. Pilbara has completed 10,158 metres of drilling with an extension to the initial program currently underway. A new near-surface pegmatite domain has been identified, suggesting a lower strip ratio at potential mine pit inventory of South Pit. As per the company, the drilling continues, with Pilgangoora project being on track for delivery in the September quarter of 2021. Then neobank lender Wiser jumped up on concluding an oversubscribed share purchase plan offer. Wiser received subscriptions over 10 million Australian dollars for the SPP. However, it elected to maintain its original offer cap of 5 million Australian dollars. Therefore, WZR or Wiser has planned to scale back the SPP applications proportionally to approximately 46% of application value with no guaranteed minimum allocation. Let's now move on and take a glance through the ASX sectoral charter. Well, the Australian energy majors such as Woodside Petroleum, Oil Search and Origin Energy are trading in red despite the oil price uptick. And looking at the crude oil charter on Wednesday, the crude oil prices again surged to their highest level in more than 2 years. The demand increased after an industry report on US crude inventories reinforced investors' views of a tightening market as travel picks up in North America and Europe. The Brent crude futures closed 0.41% up at $75 US and 12 cents a barrel on Wednesday, while WTI crude futures gained 0.19% to reach $72 US and 99 cents per barrel. Let us move on to the miners space. Heavyweight miners BHP Group, Rio Tinto and Fortescue Metals Group are trading in the green. And looking at metal prices, Chinese coking coal futures closed 5% up on Wednesday, rising for a second consecutive session on supply concerns, as safety inspections by the Chinese authorities disturbed production at some mines. And notably, coking coal is used to create coal, which is further used as an input for steel production. The most actively traded coking coal futures contract for the September month delivery on the Dalian Commodity Exchange closed at 2,037 yuan, or in US terms $314.24 per tonne. Besides, copper prices inched up after the data revealed strong factory activity and Powell's assurance to keep interest rates low to boost the economic recovery. 3-month copper on the London Metal Exchange had risen by 2% to reach US $9,489 per tonne. And on that note, the ASX-listed copper players Oz Minerals inched lower while Sandfire Resources traded in the green during the early trading hours today. Let's now take a look at the yellow metal space. Australian gold miners are under the spotlight, while the gold prices ticked up further from the 7-week lows hit late last week. And the demand lifted as the US dollar weakened a day after the Fed said inflation would not be the only determinant of interest rate decisions. Ramelius, Silver Lake, Gold Road and Northern Star Resources are inching lower today despite the gold price uptick. And that is all for now. We will be bringing more stock updates in the upcoming shows. Please stay tuned for more live updates on Kalkine TV across the economy, markets and sectors. Sage signing off.